Hi everybody, Katy Mackenzie here in the TMG studio, here with Adam Brown, owner of Vanguard Accounting. Welcome to the studio.
Thank you for having me.
We wanted to talk to you today about some write-offs as they relate to a home office space, rental properties, be they outside of your home or a contained unit within your home, and some change of use of property items as well. So Adam, can you tell us a little bit about proper home write-offs
Right.
when you have a home office space?
Yeah, so I think initially when you're looking at a home office, you just have to confirm whether it fulfills the requirement for the deduction of a home office. And typically to the CRA, that is whether it's your principal place of business, so that's one, or if it's a place of business where you only earn business income and you regularly meet clients there. So
Okay.
there are kind of the two reasons why you can deduct home office costs, so you have to be wary of that first.
I know a lot of people that have, a corner of a room, apartment,
Right.
a desk. It is a designated space, so I guess you'd recommend they talk to you
Yeah.
or their accountant to determine if that will actually qualify.
Yes, I would say talk to your accountant in that regard, because different facts mean different things, and there's case law out there that might need to be investigated in order to see if that would be deductible.
Okay. What about write-offs when you own a rental property or that rental unit is within the home that you're in?
Right, so business use and rental, like rental income deductions for those are kind of similar. Anything that kind of relates to that income typically can be deducted. So that be, you could pay for management fees for a property manager. You could pay for advertising, let's say, in wherever you're gonna put it up.
Yeah.
It's for some people that might mean some travel. I know some clients that have properties in other provinces, and sometimes they have to go out there to inspect the property, and so that might be a legitimate deductible expense.
What about writing off your mortgage payment?
Yeah, the good old mortgage payment. That is usually largest cost, and it gets into one of the don'ts, I would say. Typically, mortgage interest is deductible. Mortgage principal is not.
Okay.
So you have to be wary of that. The reason why there's principal residence exemption and stuff, so that is one of the things you have to watch, and also how people organize that financing. So some people amalgamate funds to loan, or maybe a mortgage is for multiple properties, and that could be important for your deduction.
Adam's talking there, you might have funds that were advanced for your own home or the portion of your own home that you've done, say, renovations to, and then the portion of the home that specifically relates to the rental property, there has to be a clear line and division and a show of flow of funds to actually deem a portion of that towards the rental. So,
and it's very important to get that right. The flow of cash from that loan to whatever that property is, right? So
and new in the last few years is also declaring change of use. So rental, residence, back and forth, designated on returns now.
Yeah. So I guess one thing I should probably mention as a caveat to all this: never take depreciation on your home or on the apartment. So that's a big no-no. If you do that, you put your principal residence exemption at risk. So never do that, regardless, on a home, and it's usually not that much, to be honest. But to get back to your point, change of use, it happens a lot. Things change in life, either couples coming together or separating.
Coming apart.
They may have two properties and they live in one, or vice versa. And you have to let the CRA know when something changes from being a personal use to a rental. I had this situation. Me and my wife moved in together. We started renting out her property. That's a change of use in a property, and I had to make an election for that with the CRA, and I had to do it in the year that it occurred.
So that also relates to any tax, homeowner grants, those types of things as well. So.
Right. And the big reason why you want to do the election is potentially saving some capital gains down the road. They give you a little bit more years of that place being considered a principal residence potentially, or you may have the option to decide which property is your principal residence. So it is an important thing to do. You do have to mail it in to the CRA, so it is can't really file it online per se. So it is something that you should probably talk to your accountant, especially if a property you have, you're changing how it's being used. Because you can go the other way too, where it was income producing and now it's becoming your principal residence. So.
Well, and always good before you make the change to have the discussion.
True, yeah.
Yeah.
That's ideal, yes.
So if you do have any questions as it relates to home office write-offs, rental property write-offs, or change of use, Adam would be happy to hear from you and offer said advice. Adam, how do they get a hold of you?
The best way would be through email, adam@vanguardcpa.ca.
And we'll put all of his contact information in the show notes. Adam, thank you for your information and for joining us today. And for everyone for listening, and we will talk to you soon.